All right, good morning, everyone. Welcome again to yet another amazing webinar powered by IBG. My name is Dipesh Deshmukh and I'll be representing IBG today, and I'll be conducting this webinar. Thank you so much for coming in such great large numbers, and we're very excited that I know the times are not fun, but a lot of positive things are happening, a lot of new ways we are figuring out of doing business. So thank you so much for coming. We're going to have a very interesting webinar today. Before we start the session, a few requests. One, I'll be keeping everyone on mute. Second, I request everyone to turn off their videos. Only the speakers will keep the videos on. Otherwise, I request everyone to turn off their videos. Third, if you have any questions, type them in the chat box below, and at the end of the session, I'll ask those questions to Sasha. And lastly, anyone who is not our member, who have come here for the first time, we request you to type your details, your name, mobile number, and email address, so we can update you all for the upcoming webinars and we can stay in touch. All right, guys. So these were the few instructions. I request everyone to keep your videos off, guys. I'll really appreciate it. Thank you. So a little bit about IBG. IBG is India Business Group. It's a chamber of commerce started by none other than our dear friend, mentor, business guru, Mr. Vikash Mittersen. He's also the managing director of Nazara Technologies. He's a passionate entrepreneur. He's a business guru. He helps so many people figure out things in their business, helps them, mentors them. So Vikash, can you just say hi to people?
If you can hear me.
Yes, we can.
Yeah, okay, because you normally insist on keeping us mute.
No, I unmuted you.
Yeah, I hope even I can do it myself at times when I want to butt in.
No, you can't.
No.
Because I get to play the god today.
Good enough. Because I have a favorite guest today. He lives in my building also.
Okay.
Yeah. So we walk sometimes together.
Nice. Very nice.
And he's on my board also.
Okay.
Nazara Technologies.
Great.
So you all have brought in a great asset today.
Looking forward.
Yeah, great. So
All
go
right.
ahead, go forward. Move.
All right. Thank you, Vikash. Thank you. And now I would like to introduce you all to our CEO, Priya Pansare. Priya, you'll have to unmute yourself, looks like.
Hi, morning everyone. It's a pleasure to have Sasha on IBG's platform today, and looking forward to a great conversation. Thank you so much.
All right, Priya, thank you so much. And we have, of course, our two very important people, Girish and Siddhi. They're the ones who coordinate all these meetings, get members together, solve the issues of the members. And they are absolute big pillars of support. So thank you so much, Girish and Siddhi, for everything that you guys do for us. All right. So I'm very excited to introduce you all to Sasha Mirchandani. He's an amazing person. I have met him before as well. And I don't know if he even remembers, but because I know he meets a lot of people. Look, he's smiling. All right. So Sasha Mirchandani is the managing director and founder of K Capital. He's also the co-founder of Mumbai Angels, the group that does angel investments all over. Previously, he was with Blue Run Ventures as managing director for India. Before joining Blue Run Ventures, he was also CEO and founder of Americas Technologies. So I'm not going to read his entire introduction because it runs in pages. So I'm going to be very brief. Okay. So then he started as an investor. He has done investments in InMobi, in HealthKart, 1MG, Myntra, Porter, Fractal Analytics, some of these companies. Sasha also sits on board of Hathway Cable, Datacom Limited, Nazara Technologies, Vikash just mentioned, HealthKart, Young YPO, Mumbai chapter, Mumbai Angels, Venture Mentors, amongst others. He was also the past president of Entrepreneurs Organization, Mumbai. Sasha completed his bachelor's degree in business administration from Strayer University in the US. And he also did an MMDP, that's a management program from IIM Ahmedabad, the premier institute. He was also inducted to Time Mumbai's first Hall of Fame in 2019 as an outstanding angel investor. So that is a very brief introduction of Sasha. Sasha, I would like you to say hi to people.
Hi, everyone. Thanks.
Hi. All right. So we will have a very brief presentation from you, correct? And after that, we will dive into some fun question and answer session.
Thank you.
So Nisa, if you can.
Nisa, you want to put up the screen? So first of all, thank you, Mr. Mitar Sen. Thank you, Dipesh. And thank you, IBG, for this very kind invite. I've been a big fan of Mr. Mitar Sen. He's an amazing person and he's built amazing companies. He's very busy. He's chairman of Nazara and co-founder. And then to have then built IBG on the side is a tremendous credit to him. So thank you, all of you, for your kind invite today. Today, I'm going to run through 5 slides very quickly. I'm sorry I'm putting slides together, but I thought it'll add more data. It's very helpful. And then any questions anyone has on this, if at all, I'll try my best to answer. So, you know, folks, post-COVID is a new reality. And therefore, I label this presentation as navigating a new reality. Nisa, go to the next page, please. Okay, folks, so this is very important. The first question we asked our founders post-March, after this COVID situation started getting from bad to worse, is we said, look, our companies need to have enough cash. And the question we asked them is, are you in a cash constrained situation? If the answer was right, yes, which is green on the right quadrant, the question was, do you have enough cash to become profitable? And if the answer is yes, then you obviously go towards profitable growth. Very, very few companies were in that bucket, but the ones that were lucky enough, went down that path. The second bucket was, no, we don't have enough cash. And therefore we have to obviously reduce burn. And we decided that a realistic timeline will be about 18 months of cash. Currently, with the scenario getting from bad to worse, it may even go to 24 months of cash. So the bottom line was, we worked very, very hard for the last 50 days with our portfolio to make them get to 18 months of cash. Where we are now after about 50 days of work is about 70% of case portfolio has 18 months of cash. If you look at the left side of the quadrant where it says you're not in cash constraint, the answer is no. Are you contribution margin positive? If the answer is yes, that's great news. Find ways to get your CAC and LTV in less than 6 months. And if the answer is no, obviously you need to improve your unit economics. So this is a very self-explanatory chart, but we use this chart for all our portfolio companies in the last 2 months. And if anyone's interested, I'm happy to forward to you. Nisa, go ahead to the next slide. Okay, new reality. The first point is you need to survive, right? I mean, you just have to survive. Right now, many companies are dying as we speak. And the idea was understand your cash position and extend runway. We discussed that, right? 18 to 24 months. First, we said 12 to 18, but now we're saying 18 to 21. Because the reality is, all the economists are talking about all the bounce backs, whether it be U-shaped, whether it be V-shaped, whether it be L-shaped. So we are planning for L-shaped, which means the worst case scenario. And we are hoping, which is the next point, hope is not a strategy, for a V-shaped recovery. So therefore I said, hope is not a strategy. A lot of people are hoping that things change, a vaccine is found. We told our founders, you can hope on the side, but you plan for the worst case scenario. And that's why we said 24 months. The next point is daily communication, over communicate. Right now, a lot of you are either senior executives in your companies or CEOs, and therefore you're obviously making a lot of strategy and plans, etc., for your respective companies. But do remember, you have many people working for you. In my group, we have more than maybe 2,000-3,000 people working, maybe 4,000-5,000. So the reality is, the CEO level people in those companies, they need to be communicating with everyone in the team, all thousands. So for example, one company might have 2,000 people. The entrepreneur there is communicating 2 times a week with all 2,000 people. So obviously this is over communication, but this is a time and period for over communication so that everybody in the company knows what's happening top down. Stress test the company, we'll discuss that. So I'll skip that point. The next point is, unfortunately, a lot of companies have been forced to make layoffs. And what we've been advising them from day one, which is in mid-March, let alone now, is that God forbid you have to make layoffs, make them deep and quick, and be very humane with the layoffs. But then the people who stay back, you tell them, look, now your job is secure. Unfortunately, this is not happening. And a lot of companies are making small cuts. And then after a couple of weeks, they say, oh God, the situation is not improving, let me make more cuts. And then you make more cuts. The problem with that, ladies and gentlemen, is you're creating a huge mistrust in your workforce. And maybe some of you are working in such companies where every couple of weeks, some people are getting fired. And I think that's a very, very negative situation right now because nobody can trust the management anymore. So I genuinely believe that if you have to make the cuts, make them once and for all, and then stick to the people you held on to. Of course, there could be a situation where it gets even worse, and then you may have to cut more. But the point is, people are being very, very, how do I say, they kind of going around the problem versus taking a tough stance and doing it once and for all. So that's something for you to think about as well. Next page, please. Okay, navigating a new reality. Hire opportunistically. You know, we just talked about layoffs and other such things, right, folks? But the reality is that there's no better time to actually hire great people. So all in my career, from the time when there've been down situations like .com in 2002, Lehman Brothers 2008, and so on and so forth, the best people my companies have ever hired, folks, has always been in these downtimes. You get people who normally would not want to work for smaller companies, say, okay, why not? Let me try. And those are the best people they actually get. So I always believe that you should be hiring opportunistically in these periods. The next is, you know, most of our companies have got fixed costs and variable is limited. I'm saying, how can you move your business to more variable and less fixed so that God forbid the next time a downturn comes, which obviously will come many times in your life, you are aligned to actually reducing your costs much, much faster. So that's something that we've been pushing our entrepreneurs is how do you get to more variable costs and less fixed costs. Next is don't cut muscle, just fat. So a lot of people in panic have started cutting core parts of their business, key people, etc. So we believe that the difference between the muscle and fat is very important. Many companies, pretty much every company on the planet has fat. So the idea is, can you keep cutting fat and less muscle? This, of course, the next point everyone knows, anything where you can service the customer at home has exploded. So we have a company called 1MG, it's an online pharmacy. The numbers are through the roof because anyway where you don't have to go out in these conditions and buy something and it can be delivered in a safe environment to your home, those companies are doing exceedingly well. So companies like 1MG, etc., done very, very well. Another point is generally demand moves to adjacent opportunities. Example, if we are sports consumers, but we become gamers because there's no sports. So then some people are forced to become gamers. Offline education moves to online. So that's another space that has exploded. Online education in India now and globally is a really hot space with some phenomenal companies getting built out. So that's another opportunity right now. Can you go to the next page, please? This came from learnings from my Chinese friends. And what they've been doing is saying, hold on, company X has 100 people or 1,000 people. Why can't you work with half? So this is for the entrepreneurs in the room who are listening. And we've started working on this metric. I sit on a couple of boards. One of them is a very large public company. And we said, if we have 3,500 people, why can't we do with 1,500 people or 1,700 people? And we're actually working towards that goal. Now you can imagine the profitability of that company if we actually get 1,700 versus 3,500. So we'll see how that goes, but it's looking very interesting right now. Another point is, unfortunately, because of all the layoffs, etc., there's a lot of people who are willing to voluntarily reduce their cash position. So we worked on this formula with many of our companies saying, if you reduce 10 lakhs of your salary, we'll give you 2 times that in equity of our company, whichever company that may be. And that has been a very big hit for many of our companies. So something for you to think about. This way you get ownership where more employees become owners of your company and they feel like they own the business. And those companies actually end up doing much better where employees have ownership in companies. Without a doubt in my mind, the data proves that. Things like company bonding, like virtual lunch, what we do in K Capital, for example, is we have virtual lunches. We used to obviously have lunches in person in offices, but now we do it every Friday with some teams, Mondays with some teams, etc. And that creates that link. Otherwise, all we're doing is work. Even if it's a 30-minute lunch where everyone's eating their own food at home and there's no agenda, just hello, how are you discussions. We find that to be very, very helpful. The next is, again, over-communicate with your best customers because the customers know that you're going through trouble because the whole world is in trouble. But a lot of times, people are scared to phone them up and tell them, give them bad news. But I feel speaking to your customers is very, very important and we're doing that all the time. K Capital, our customers are the following, our entrepreneurs and our investors. So we've been over-communicating with them. We're doing calls every couple of weeks with them, detailed calls, updating them on where the fund is, etc. And as far as the entrepreneurs, we have weekly, if not daily calls with them versus once a month in the past. This is just a question I'm leaving for everyone. What will drive growth even in a time of fear? So there's many other opportunities which are actually growing versus most of us are worried, right? So this is where you need to be looking out in your antenna saying, okay, hold on, the world is in panic, but there's certain things moving in a positive direction. What is that? And if you can play that, you can be the winner in this category. In the sense, from this whole pandemic nonsense that is going on, you will see some amazing companies come out. Next slide, please. Okay, this is a very important topic to me. Smarts and motivation don't punch a clock. So what I mean by that, ladies and gentlemen, is let go of the concept of 9 to 5 workday, or the idea that your people need to come to be in office. We all feel uncomfortable that ghar mein kya kar raha hai? Is he or she working? Are they just chilling out watching movies, etc.? We need to start trusting our colleagues and people in our companies that they will work and get the work done. And what's going to happen is KRAs will move from just the traditional way of doing a KRA to outcome based. So as long as you can do X amount of work in a certain time frame, it doesn't matter, right? You can be working from home, you can be working from Chennai, it doesn't matter. So that's how the world is going to move to, in my opinion. Remember, if you have to fire people or ask them to go, people who stay back, remember how colleagues were who were let go. So if you have to let go people, worst case, please do it humanely. And remember, the people who stayed back will also see that and see that you're a humane employee, and they will respect that. And even the people who leave will speak well of you later and maybe even want to come back to work for you in the years gone later as the economy improves. Another thing we're doing at K and in our portfolio companies is we keep them learning when you go virtual. So we're doing constant learnings. Every week we have different things we make our colleagues at K Capital learn, whether it be Harvard case studies, whether it be new learnings, could be personal issues, how to adapt to anything. We do a variety of things. So their minds are constantly on the buzz versus just saying, okay, this is business as usual. We find that to be extremely useful. Next slide, please. Another problem that's come out of this pandemic, I'm sure many of you may be going through it and you don't even know who to discuss this with, is loneliness, right? First, extroverts, people who are generally more out there, suffer. Because what happens is they used to be interacting with people and they suffer a lot. But even introverts start suffering, right? So you've got to acknowledge that the stress and anxiety of the employee, but also provide affirmation in your confidence in them. So you've got to acknowledge that this is happening. We have a company called WISA, W-Y-S-A. Anyone can check it out. They're a mental health chatbot. And our numbers, unfortunately, are exploding because people are so stressed out right now worldwide that they need some affirmation, some calm. And chatbots like WISA are helping a lot. But this is a very big problem, and I'd encourage all employers to be working with your employees to see how they can reduce the loneliness. In some of our companies, we actually have experts come in every week, and they have access to every employee in the company, and they can talk one-to-one and in a very private manner and talk about their problems as far as why they're lonely, how they're feeling depressed, and how they can get out of it. It's no longer a stigma. It's a medical issue. So anyone facing loneliness, don't feel that it's something bad you've done. It's just human. And if you please acknowledge it and sort it out. It's very important. The key, ladies and gentlemen, is to find ways to make sure every single person on the team feels like they have a challenge and they need to solve it. So it could be, if you're a retail company, it could be as small as how to better greet customers from when you used to do in the past, or it could be a big strategic move like Nordstrom, which is a large retailer in the US. They decided after COVID that they want to go only online. And that's obviously a very, very big strategic move. So the point is, it doesn't matter. Every employee is a different level in a company. Everyone needs to be motivated about solving big issues. And these examples are great examples of that. So now I'll stop. And if there's any questions, I'm happy to answer.
All right. That was really insightful, Sasha. And a lot of learning for people. Now, before people start asking questions, I thought I had to ask a couple of things to you. To start, can you please tell us how your journey about K Capital, how did it all start?
So Dipesh started investing a long, long time back. That was in 2001, during the .com era. I made my first investment in a tech company. And within a couple of months, I remember making the investment because I found this investment. I wanted to have a co-investor with me. So I said, let me go first find someone. And I realized there were very, very few VCs or even angel investors in 2001. Not even a handful, not even one handful. So I created my own fund and I ended up investing in this company. This was 2002. I made a few investments, made a small exit. And then I said, I'm done investing, because by then I was operating CEO of my own company. But in 2006, me and my good friend Prashant Choksi, we were having a coffee and we said, why don't we join an angel club? Because we can make small investments and join with people like you or Mr. Bitar Singh or anyone on this call. And we could do this together. But we were surprised that there was nothing in India in 2006. We checked the web once, twice, checked the web. To cut a long story short, we then created Mumbai Angels. So from 2002 to 2006, I was making personal investments. From 2006 till about 11, I was making it through Mumbai Angels. So I would make an investment, you would maybe invest, you don't have to invest, it depends on that. And then in 2012, I started my own fund, K Capital. Because between 2006 and 12, I was working as India head for Nokia Ventures / Blue Run Ventures. That was a very big fund, about 1 billion under management.
Wow.
So that's how I started.
Interesting. Also, I have heard you talking about that when you look for an entrepreneur to invest, the number one characteristic that you look for is a determined entrepreneur. So can you please tell us a little bit more about how do you identify this determined entrepreneur?
Yeah, very good question. It's very difficult, right? Because when we come in, the entrepreneur is just a young individual. I mean, it doesn't have to be young. We've done 50, 60, 70 year olds also. 59 is and I'm old myself. Point is, it's very difficult to determine an entrepreneur that comes in without any track record as far as his or her business at that point. But they have a history always, right? They've studied somewhere, they work somewhere. So we ask a lot of questions, several questions around that in our due diligence, around asking how determined is he or she. And we have a science around that. Obviously, it's not perfect, but we think it's working quite well for us to get a fair determinant of his or her determination. And this easily is the number one trait for success, because entrepreneurship is super hard. There are many people on this call who are entrepreneurs, and I'm sure they all agree with me that it's super, super hard. Mr. Mitar Sen is, you are. So the point is, let's take an example of my first investment. That was 2001. When we invested, the company was a .com. These were all IIM Ahmedabad graduates, so they were best of best, right? By the time we pivoted to analytics in 2002, analytics / data mining was still super early in 2002. And there were 6 founders. And the opportunity cost for them to sit in a small office in Andheri versus going and working in Procter & Gamble or Wipro or Infosys was too high. So to be fair to them, a few of them started leaving over the years, right? Because all their colleagues were doing so well, getting $1 million salaries, they were sitting in Andheri. But 2 of the founders hung on and hung on and hung on. And now in 2020, they're still there. And today, this company just raised $200 million last year from Apex Partners. And these entrepreneurs have done phenomenally well. We have 2,500 employees in the company. They have a full floor of the World Trade Center in New York City. And customer base is only the top 100 companies in the world.
Wow.
Right? And it's the fastest growing analytics company in the world, not just from India. But you can imagine that now it's good to talk about this great story. But think about the determination of these 2 entrepreneurs who hung on from 2001 or 2 to 2020, 18 years. Today, they've done better than most of their batchmates, easily. But the level of determination was at another level. And that's what you need to succeed.
Interesting. So that's a nice story.
Yeah, it's a fact, not a story. It's a company called Fractal Analytics.
Okay, cool. And so I've heard you saying that 10x returns is the thing of the past, and you look at 100x returns now. So tell us a little bit more about that.
No, it's very different, Dipesh, when you invest from a fund or when you invest as an individual.
Okay.
When you invest as an individual, you have a different formula in your mind. Everybody in this call will be different when they invest, right? Someone wants 3x, someone wants 10x. Someone said, let me just beat the public markets and I'll take a chance. But as a fund, we take money from HNIs like yourself or Mr. Mitar Sen. So, and we have a corpus of X. For example, the last fund was, say, $50 million. So if we have a situation where we get 10x return on a company and that becomes our best company, that doesn't move the needle on the overall fund. And therefore, we need those outsized returns, like Fractal Analytics was for me, to make a very reasonable return for our investors and give that money back. And therefore, we have to have the home run companies in our portfolio.
All right. Great. So Sasha, is it okay if we start taking some questions from people, because they have already started typing?
Sure,
and guys, once more, a reminder, if you have not already done it, please put your name, mobile number and email address in the chat box so that we will start giving you updates on the next webinar. I'm just going through. Okay, so the question is, I understand it is a time of saving cost and reducing CAC, but how are your portfolio companies going about their marketing?
Yeah, good question. Very good question. It really depends. So what we've done is when this COVID situation happened, all companies got marketing to zero, most of them. And then we started going ground up, like a zero-based budget, saying, hold on, what do we really need in the marketing budgets? And what can we get rid of? So a lot of things we got rid of because we realized that marketing was not required for X, Y, Z. But we kind of focused on the highest ROI, which was giving us highest ROI, and stuck to that part of the marketing if we really had to do it. And that's what we've done in most of our companies. The rest has been eliminated for the short term. So for example, one company was advertising on The Economist in the US, right? It's very high cost, but the ROI was very high because the CIOs read it. So we left it as an example. But we were doing a very big event at the Ritz-Carlton in San Francisco. We said we'll cancel that as an example.
Okay, all right. Next question. Sasha, do you think co-working spaces would find favor for those whose office is distant and who wish to work out of home, but nearer to home?
Yeah, I think why not? Even at K Capital, we've been discussing, do we even need an office? And, you got to question everything. So we said, do we really need an office? And we don't have an answer yet because we have a lease till the end of the year, but we have time to decide. But we may just decide that, look, we don't need offices anymore. Anyway, our Bangalore office is a co-working facility. But in Bombay, we may just say, look, forget it. It's a pretty large office for a venture capital fund. Give it up and take a co-working space with less seats. And then everyone who has to come on that particular day uses it. And it's like a rotating desk, Why not? Yeah. And basically, people will want to work, maybe our homes, right? I speak for myself first, are very small, especially in Mumbai. So it's not practical to be working home all the time. So if the company can organize a co-working facility next to my house, I don't have to go from Mulund to Nariman Point, then why not?
Makes sense, yeah. Is India likely to become the next startup nation of the world in the next few years?
Yeah, for sure. I mean, our promise has been there for the longest time. We haven't delivered on it yet. So, everyone gets frustrated saying, we keep talking about India hype, but what's happening? But I'm by nature an optimist, right? You can't get up in the morning and be a venture capitalist and be a pessimist. We have all the ingredients, but we haven't executed like so many other industries. But I think I have no doubt we have the potential. If we can put the pieces together, it's going to be the next big thing. Huge market. See, China, the most valuable companies are 500 billion, like Alibaba and Tencent. In India, we have Flipkart at 20 billion. Of course, the GDP is $10,000 and we are 2,000. So obviously, we'll be smaller companies. But it can't be 20 billion to 500 billion, right? So we feel that we have a huge headway to build some humongous companies from the venture capital industry. Mr. Ambani's built Jio, but he was already a very rich man and he could put money. And it's an amazing company he's built. But venture capital also will build 50 billion, $100 billion companies.
Cool. Okay, so the next question is it a good time to invest in real estate? Will there be a major drop in prices in South Mumbai real estate?
So I'm sorry, I can't answer this question because I know every builder in Bombay on a personal level extremely well. And so I have some idea where I speak to every one of them. But I'm not an expert, so it would be unfair for me to put your money in jeopardy. I just give one great advice by my smartest real estate owner in this country told me, I can't mention his name. He said, when you buy residential, and it could equate to commercial also, always buy the top 3 buildings in where you live. So I remember I used to live in Malabar Hill in Mumbai, and we moved from there to Nepean Road. And when we wanted to sell that flat, it took us 3 years because that building was probably the last building in Malabar Hill. So the prestige of living in Malabar Hill, but the building was crap. So I learned if I had to move, I don't mind moving even to the end of the world, but always buy the top 3 buildings in that area. So when you exit it, it moves very quickly. Versus if you buy the 15th best building in a fancy area, it'll take you a long time to get out.
Okay. All right. So the next question is, Sasha, can we know a specific format for presenting a business proposal? what are the major factors you consider for venture investment?
So this is a very standard answer that pretty much every VC, even a baby VC will answer it, but it's actually the same. Is obviously the team. Team is everything, right? Second is very large markets. You have to go after very large markets. You know, the VCs don't want to go after smallish markets because I explained earlier, we have to return huge money to our LPs. Third is a clear exit path. Fourth is there an unfair advantage your company has? Maybe it could be the team. We just say the team is so good that's an unfair advantage. You don't have to have technology unfair advantage. And the fifth could be anything. It could be, tech. It could be anything. But these 3-4 points are critical in the way we evaluate a company. And then there's the software elements, right? Like I said earlier, determination and other such software things. We don't discuss that with the entrepreneur, but that's our separate checklist we have.
Okay. All right. Is business basics likely to change entirely post-COVID?
Well, I'm not sure if I understood the question, but yeah, the world's changed, right? Whether it be, like I said earlier, whether I go to work from my office or not, whether, how do I measure my employees? Will it be outcome based or not? What industries will flourish post-COVID? So there are lots of changes that will happen. A lot of it will also be the same. So it really depends on how it all plays out and how fast the vaccine is brought to the table, right? If the vaccine takes 5 years, then obviously lots more will change, right? Because you can't have a situation where we're just hoping that it changes. And if you get very, very lucky and someone comes up with something in September, then the changes will be less. So it really depends on so many factors that are beyond what you and me know right now.
Right. Very true. Which are the sunrise industries for budding entrepreneurs besides what you mentioned, pharma and online education?
Look, this is impossible to answer because India is, ladies and gentlemen, an era of opportunity. There is no limit. I'll give you an example. My father is in the consumer electronics business. So he manufactures air conditioners, washing machines, etc. They have done a very detailed analysis of the AC industry. Not my father's company, but McKinsey and A.T. Kearney and all the large consulting firms. And by 2020, the data said in India, the AC market should be 18 million air conditioners. Ladies and gentlemen, it's only 5 million. So as per every metric, as per whatever we should have done, we should have been doing 18 million air conditioners. Now, air conditioning industry is the old world industry, right? But look at the headway in air conditioning. We can go from 5 to 18 million, like it should have been done already today. So my point is, there's no industry which is played out. There's opportunity everywhere. You take an example of Zoom. We're all using Zoom, right? Most of the investors missed investing in Zoom. But the founder came with a product that was much better than competition. And the competition was big boys like WebEx and so on and so forth, Google's Duo, etc., etc. Microsoft had a company as well in this category. But he just came with a substantially better product. And today Zoom is worth 200 billion, right? It's 200 billion. So remember, folks, it's nothing to do with the category. It's how you run your company and how you execute. You can win in anything.
All right. How has COVID impacted the VC mentality in terms of the principles of investing? Will there be shorter investment durations, more of a bottom line approach, etc.?
Yeah, I think bottom line approach, I think, will be far more focused on where we're not expecting the entrepreneur to get to profit tomorrow morning, but that mindset of just growth has slowed down. So this is not just with COVID, but if you remember, even last year, there was a lot of IPOs that happened in the US. Companies like Lyft, Uber, etc. They all listed at a certain price point. Lyft was 26 billion, Uber was 70 billion, but they all dropped dramatically because they were just losing money. They were consumer facing. Peloton, the biking company. But if you carefully look at the US IPO market in 2019, there were a lot of under the radar companies like Datadog, Cloudera. Of course, Zoom is now no more under the radar. All these companies actually listed and went up because they were profitable. Slack was not profitable, but at least had unit economics showing a path to profit. So it was 20 billion IPO. And then, of course, with WeWork collapsing. So VCs have already been on the edge of this growth at any cost model to maybe focusing more on the bottom line. COVID has, of course, pushed that case much, much harder. And therefore, that focus is now moved to what I just said, which is better unit economics versus just growth at any cost.
All right. Now that we are used to online meetings and Zoom, etc., will airlines go out of business?
Many companies and industries will go out of business. Airlines are already start going out of business. But if you're well capitalized, like Indigo is not going to go out of business. It will definitely be there. Or if you're lucky and you're a state-owned airline like South African Airlines, they announced that they're going to restart again. But that's cheating, because that's the government is doing it. But entrepreneur-led business airlines are going to find it very, very hard. You saw what happened to Virgin Atlantic.
Yeah.
So Richard Branson had to put in his personal money to keep it alive. You'll see a lot more airlines go out of business.
Yeah. And okay, work travel will reduce, but still people would want to travel for vacation, because Niagara Falls is not the same on YouTube,
Yeah, that will come back. There's a firm called Silver Lake.
Mm-hmm.
Geo got money from many funds, so people have forgotten, but one of them was Silver Lake. Silver Lake has put money into Expedia and one more travel company, like more than $1 billion each, as of last month, in the middle of the pandemic.
Okay.
Because they understood that travel has to come back. It'll take time. And they haven't put a timeline on when it will come back, but they believe that it has to come back because you and me, all of us want to travel. Like the first thing I want to do is, once this calms down, is to travel, right? Of course, in a safe environment. And therefore, I strongly believe travel will be an industry that will come back. Only you got to manage the next 2 years, 3 years, which is not easy. And therefore, there'll be many deaths. But the ones that are well capitalized, like Expedia or Make My Trips or whatever in India, should be fine.
Yeah. All right. How do you ensure that your team continues to be motivated, charged up, and remain with you in the time of crisis? What steps I need to take as the CEO, even when I'm facing cash crunch?
That's a tough point. And like I mentioned earlier, we constantly communicating with people, finding interesting things for them to do, maybe finding ways to say, okay, look, we have a cash crunch, but I'm willing to give you equity if you give up some salary, and so on and so forth. You have to go out of the box for things that you never would have done in the past, to find ways to survive, bring your costs down, but keep the team with you by being transparent about the problem, right? Say, this is reality. Can we as a team fix this? Daily calls, keep them engaged with lots of other things, sharing equity. I mean, there's so many other things you can do. It still may not be good enough, because it's easy for me to say and then to execute the stuff. But there are enough ways to get things moving in the right direction, because as this market improves, those people will be fully engaged and feel that you're a leader that they want to work for. And those are the companies that will break out of COVID in a very, very good shape, versus the companies that are just stuck.
All right. So what is your view on why Indian entrepreneurs don't think global as its market? Can't recall Indian brand that is truly global.
Well, not enough are, but they're enough also now doing it, right? But if you see, there's actually the B2B companies that went global first. You take my own company, Fractal Analytics, which we founded in 2001. Today, it's a multinational. The ads are not in Indian papers, right? It's on the back page of Economist, as an example, right? It's a global company. All customers are global, North American, European, Japanese, etc., etc. So there are many companies that are now breaking out and becoming global. But what was happening earlier, ladies and gentlemen, if you take a country like Israel, Israel is 8 million people. So when they would start a B2B company, they knew that they had no choice, or a B2C company, they had to move to the US, because the captive market is very small. India is actually 2 markets. It's China and Israel. For B2B, Indian companies are not paying each other enough. So the companies like Fractal had to go to the US. But B2C, we're a big enough market. Like Flipkarts, the world have been built, Oyo, Ola, etc. And so many more companies, Myntra. So we felt we can do it here. So why not? Like China. But now you're seeing companies that are saying, hold on, the universe is our platform. And you will see more and more Indian companies become truly global. It's taking a little long, but you will see. In the next cycle, you'll see some very large companies.
Great. That's a good news. I think what he meant was the brands. I mean, I think he's talking of the Coca-Colas and the Apples and the Nokias.
Yeah, he's right. So because India is a large enough consumption market, so they were happy to do it here. But now you're slowly seeing companies say, why not? But why only India, right? If Coke can come from Atlanta to Timbuktu, why can't Thumbs Up, of course, now owned by Coke, but say it was not. Why can't Thumbs Up be sold in the US or wherever? You'll see it happen.
Yeah. In Patel Cash and Carry, you get Thumbs Up.
but you should get Thumbs Up in Walmart. You should get it in Kroger's. Americans should be getting it. Why not? It'll happen.
Yeah, I'm sure it will. Wuhan, Italy, and many more countries have already low or no new cases of COVID without vaccine. So I don't think this will go beyond September. Okay, just a comment.
I hope so. I hope you're right.
Yeah. Will all businesses now move to online/e-commerce?
No, not really. But what's happened, COVID is to digitization what Paytm was to Demon. So there's a huge opportunity where all our businesses are moving to online very, very fast. Like these companies would never have moved or gone very, very slowly. Like you take my own father's company, a majority would go dealers across the country, right? But now a large part of his sales are coming from Flipkart and Amazon. People are buying products like anything, and this is an old world company. So I'm seeing that there'll be there's already happened a huge push towards online. You can't go 100% online, or you can, but a lot of companies still have offline components. But digitalization is going to help us tremendously going forward.
Cool.
Thanks to COVID.
Yeah. What do you think graduates should be thinking of doing after college now?
It's an unfortunate time to graduate, but if you take it in, it's like anything in life, right? A cup half empty or a cup half full. So if you have a positive attitude, you take it to your advantage. Start companies. The best time to start companies, ladies and gentlemen, is right now. Always in a downturn. The best time. Start a company. There's enough money in the system to fund you if the plan makes sense.
Yeah, absolutely. The money is available at sasha@k-capital.com.
No, but 2008 we did Myntra, for example. Myntra in 10 years, 6 billion when we sold to Flipkart, right? 6 billion enterprise value.
Wow.
Right? So, and the talent that he got post Lehman Brothers was phenomenal.
Yeah. Next question is, what is the future of travel companies, future from investment point of view? You just
like I said earlier,
right, that.
Yeah, I already answered that.
Yeah. See, what's happening is some of the questions people have typed already, but
that's fine. That's fine.
Yeah. Sir, how can family-run businesses with many old skill sets and old marketing channels and very few practical? I mean, I don't understand the question, but he's trying to ask how do family-run businesses, they should cope up, old skill set, but in the new probably.
Well, it's difficult for me to answer that, but maybe one way to do it is try to get new talent in. All you need, remember in life, ladies and gentlemen, is one great person to come into your company. He or she could transform the entire company. So, it's easy for me to say that, and you say, but my company is like this, who will come? But the idea is, if you have a positive attitude, say, no. This is the skill set we need. We need to find a way to attract this person into our company. Obviously, you can't do it one person, but when he or she comes, he or she then gets another person, and it's a slow rebuild. And suddenly you have a team full of A-star people. So I would just identify where I need to improve dramatically and go after the best person and spend all my time on patawing him or her to come. As an owner, that's your job.
Yeah.
Is capital allocation and get great talent and then get out of the way. And then you'll become 10x richer, if not 100x richer. And while you're relaxing and someone's doing something for you. If you look at DMart, what is DMart? The big man, Mr. Damani, was a stockbroker. But he just found an idea. He knew he couldn't run it. He found Neville, young guy. Right? And he said, and he moved out of the way and Neville made the business plan. And today they are more valuable than every retail company, including Mr. Biani, Mr. Ambani, Mr. Everybody. And everyone's made money and more importantly, built enterprise value of staggering status. So all that was one person. Where did Mr. Davani have the skill set? He found Neville, one man. And all he did was get out of the way and become chairman of the company. And he's not even going to work every day. Neville's doing everything, but credit goes to Mr. Davani for finding Neville. So it just took one person and the highest value in this country.
Great. All right. I work as a CMO with a cybersecurity firm. While it is a need of the hour, how do we create the need and urgency to people on the severity of being hacked?
Yeah, you're actually in a great space, right? Because you're absolutely right. People are not taking it seriously, the severity of being hacked. Even in our own portfolio, when we write to our founders, they say, yes, we agree, but we have other agendas, other things. So unfortunately, people are not understanding the severity of the situation. And only when they get hacked do they become, oh God, what happened, So I really don't have an answer. We are struggling too. but you're in a great space, and I think that once you crack your go-to market, you can build a phenomenal business. Depends on what part of security you're in, but pretty much all security businesses right now have a big opportunity.
Okay. What do you think about the 21 lakh crore package announced by Indian government, especially for MSME sectors? It will take 3-4 years. My question is, this government will beat to China market?
So I didn't understand the question.
Even I didn't understand the question. My question is, this government will beat to China market? Mr. Praveen Gandhi.
He's saying, will we beat China in the sense?
Yeah.
Okay, let me try and answer if I understood. We have a golden opportunity to become a manufacturing hub, right? Because China has become the most hated name globally. But unfortunately, Vietnam and other smaller markets have an advantage. Even Bangladesh is actually doing much, much better than us. We are left behind because our policies have been rather unfortunate. Our infrastructure is rubbish. And therefore, I don't think we're going to win this manufacturing battle, which we think we desperately need to do, because we have 100 million people now unemployed. And companies like my father's, which actually used to employ more than 3,000 people, now employs 800 people because he's importing from China. Now, Ulta, he has huge factories, so he can actually do the opposite and be make in India and sell global. But the infrastructure, the ports, the timings, the viability doesn't exist. And unless something dramatic is done, we're not going to be trying to do that. So we just have to continue doing what we are. And that's a pity, because we could have employed thousands of more people just in my group itself.
True. Is there a threat of leakage of data and trade secrets when I'm doing online business, because we rely on remote servers?
Yeah, so you should be reaching out to the gentleman who's a cybersecurity person. He can help you with that answer. We've got some business.
Yeah. So I would like to add on to this, Mr. Gupte. If you have the right security in place, you are at a lesser threat. But it's like, no matter what kind of locks you put outside your house, if somebody has to really break in, they will.
Agreed.
So,
but just you got to take at least some basic precautions.
There are a lot of things available today which can make absolutely your online thing safe. So, is $5 trillion economy just a dream, or will we get it?
I believe we should be 10 trillion. Let me repeat, we should be 10 trillion. And our rupee should be not 80 but 40. If it gets to 40, 110% will become 10 trillion. Correct. So all we need is a different policy mechanism. We need like a KV Kamat to come in as finance minister who's very aggressive and really plays the game of the foreigners. Now, I don't want to get into a discussion on what the play in the game of the foreigners is, but that's where the opportunity is, in my opinion, where I feel that we can be easily a 10 trillion economy.
All right, that's a nice answer, and I'm sure we'll cross that. We have to. I'll take one last question before closing down. What are the clauses you put in as a financial investor to make the investment more secure?
This is a too long an answer. I mean, we have very boring answers. The standard clauses we have, there's so many. So if someone wants, I can send them a blank term sheet. If you send me the email ID or whatever, you can email me directly.
Okay.
We can send you a term sheet that you can look at if you are interested.
Okay. And are these things negotiable, or it's like when you're buying property, builder bolta hai sign karo?
No, everything is negotiable. In our business, everything is negotiable. But there's certain points that are not negotiable.
Of course.
Which we know that our lawyers never let us leave those. Those are obviously not negotiable.
Sure. No, because obviously your money is at stake, so you're taking the higher risk, right? So, all right. So, with that, there are some more questions that are coming up, but in the interest of time, I will have to. All right. So, can I request Priya to give some closing remarks? Priya, you'll have to unmute yourself.
Hi. Thanks a lot, Sasha, for such positively insightful conversation. And I'm sure everyone over here would take some of the other takeaway from this conversation. Thanks a lot.
Thank you so much for inviting me, Priya, Dipesh, and of course, Mr. Mitra Sen. Everyone, thanks for your time this morning, and be safe. And we look forward to being in touch. Thank you, everyone.
Thank you. Sasha, before that, I'll just quickly invite Vikas to say a few words.
Sure.
Thank you. I'm not doing a vote of thanks, but of course, I want to thank Sasha. I want to put a new thought since we are on the startup talk today. I want to put a new thought. Can you hear me, Sasha?
Yes, sir.
Okay, last 10, 15 years, I've been watching this startup thing growing in India. But whenever anybody thinks of the word startup, we think of college students, we think of graduates, we think of people who are just coming out of college and starting something. Now, why don't people who have experience of 30 years, 25 years, 20 years go into the startup mode? I mean, they have the best experience. They've worked in companies, they've worked in good companies, they've seen the ups and downs. It is something that would be an asset for them to start a new company on their own. And they would have got some money also by then. It's not a question really, it's just a comment.
Yeah, in fact, one of our best companies is an entrepreneur who was about 59 or 58 when we funded him. And after that, Sequoia Capital put money and several other funds put money. The company is doing exceedingly well. So we are not just talking about funding a little bit older entrepreneurs, but we have done it and with great success.
So there should be more, in my opinion.
Yeah, for sure.
So thank you again. Thanks a lot.
Thank you, everyone.
Over to you.
Thanks, everyone.
All right. Sasha, thank you so much. It was absolutely great to host you. And thanks for your frank and very candid inputs and answers. And everyone,
Thank you, everyone.
have a great day. Thank you so much, Sasha.
Thanks so much.
Thanks. Bye.